Good morning, this is Anka Metcalf with TradeOutloud.com. Welcome to my pre-market game plan for the major future indices, gold and oil, and today we're going to talk about bonds as well. Today is Thursday, May 18th. It's 8:45 a.m. Eastern Time. Before I begin, let me remind you that we have a new class that is starting this Monday. It is the 6-day Power Income Day Trading Futures course. That will begin this Monday on May 22nd. We have 5 days of full educational event from 5 p.m. Eastern Time till 8 p.m. Eastern Time. And also we have a trading lab that is scheduled for May 30th from 9 a.m. to 11 a.m. Eastern Time, where we get to put everything together that we have learned in the class, and also we would get to trade together. We will also trade together for the next 30 days following the class. So if you would like to hear more about the class, please feel free to visit our website. It is tradeoutloud.com/futures. And if you want to register, feel free to email me at info@tradeoutloud.com to find out more about the class, to talk about your trading goals, and also to learn more about our course, obviously. All right, so let's dig into the market, and let's start with YM. After yesterday's trading session, where we have tested multiple levels of support, actually 2 levels of support throughout the day yesterday. We did have follow through, so that was like a breath of fresh air to have follow through, because that is when the money is being made, when we are having follow through, when support levels are being broken, when resistance levels are being breached as well. So that creates the follow through, and the fact that you have a wide tradable void in between support areas, that creates the volatility, and that also creates the fluidity for price to potentially reach those areas. And sideways market is just really hard to trade. All we're doing literally is trying to scalp here and there. And don't forget one thing, that we had 2 follow through days, and those were on April 24th and 25th, and then we were sideways from April 26th all the way into yesterday, so almost for a whole month again, nearing a month. Yesterday we did get a spike to the downside. This is the spike to the downside. I just want to show you real quickly the daily chart, the way we stand right here. We're trading within this cluster, which was, again, extremely hard to trade throughout the month of March and April over here, because we were in a sloppy range, forcing it to the downside. And you could see here touching and breaching this support area, but yet not having follow through to continue lower, but then spiking higher. And these were the only 2 follow through days, because within this range you have to have the scalpers hat on, the scalpers mentality. So yesterday was actually the first day when we had a little bit of follow through. Today we're having a little bit of a narrow day, if you could see here, and the Dow was down 75 points as of this point. It's down 0.37%. That's not very significant. Usually after a big sell-off day, you're having a consolidation, and then if you have room to the downside, which we do in this case, 20,323, then we can definitely look for continuation lower, or the price can stabilize here, and on a pop of a daily range to the upside into the 20,665 area, we could have another run into the choppy range. So let's go to the hourly chart, and let's see what we have in store for today. So today's support level that has been set in the European session, 20,475. Resistance levels from the overnight session, 2 a.m. Eastern Time, 20,664 area. And you can see here that we're trading above this prior pivot low. This is resistance right now. We have a declining moving average. We have the crossovers here that happened into the overnight session, the early Asian session here. So we're trading to the downside. Let me remind you that we have also touched upon this low right here that you see at 20,475. We have also touched upon the a fib level, and that is the 78.6 fib level, which is the danger zone. So anything below 462 is going to be seen as bearish, with a possible correction all the way to 20,313, which is the prior low that we set back in April, and that is on April 19th. So the game plan for today, as long as we maintain resistance into this area, we will be looking to short. So 20,563 is going to be resistance moving forward. As long as this level is not going to be reached, we can look for and breached. I'm sorry. This is the area where we're going to look to find reversal patterns, obviously on minor time frames. A break below 474, like I said, can potentially unleash more downside. But like I said, 462 is the next support level, and then 450. So if we break this level, then we can talk about about a follow through to 20,400 and 20,314. So 20,314, yeah, that's the level on the daily chart. So all in all, this cluster right here is gonna tell the story. Anything that breaks above 20,563, remember all the indices right now are in negative territory, more or less synced. Yesterday was an easy day because we had all the indices that were synced, so they were all down the same percentages. Right now, NASDAQ has a little bit of strength that is coming through. We did have some NASDAQ stocks that have reported earnings this morning and that are pushing the stock higher before the market open, 9:30 a.m. Eastern Time. With that being said, let's move on to the S&P 500. S&P 500 continues to be the middle child because it's only down 0.29%. And pattern-wise, similar to the mini Dow, as you can see, support level is set at 2344 and resistance at 2367. So as long as we maintain this range, this is going to look bearish. You could see the 20-period moving average that is pressing against price here. We developed another area of resistance, 2354. As long as we don't breach this area to the upside, we can see pullbacks into this area as being shortable. So once again, this area right here is going to tell the story for today. If we break above this area, we can see a further continuation into 2360 and perhaps into the 2366. The way we're setting up right here, we look like there is more downside to it. The next target that we have is 2340. This is the area right here, right below the support area. So 2340 is going to be the next target area. If we break that level, then we can see further correction 10 points lower into the 2330. All right, let's move on to NQ. So the mini NASDAQ, weaker, however, it has the strongest bounce, as you can see here. This is going to be 53.73 is going to be the key area for today. If we break below the 73 area, we can consider a stop into the 55.80. We might potentially revisit the 55.50 level. Remember, 55.50 level is the 61.8 fib, so that is really, really important. But before that, we have to break the 40 level, which is the 50% retracement. So with that being said, these are going to be the targets. The above mentioned are obviously going to be the targets. If we pop over 55.80, then we can see a further continuation into the 5600. And here we would have to wait for price action to determine whether we're going long or short, because this is going to be a double take. If we break above 5600, then a steeper correction, then a more pronounced correction could lead price all the way into the 25 area, 5625, 5640-ish area, and from there on we can look for another pullback to another entry to the downside. But if we remain weak at this area, we will continue as discussed a few seconds ago. All right, let's take a look at gold. All right, so gold has been stabilizing in the hours, and gold has been actually sideways for actually most of the morning yesterday and most of the afternoon. So we did have the spike that occurred, actually the breakout that occurred, and yesterday we did have we did have a move to the upside, not considerable, not extremely considerable, and then we stabilized at this level. So if the 53 area is going to be remain intact, any buy opportunities can be set off this area. Keep in mind, this is a huge resistance area. So 1265.50. So this is the area right here. It went all the way to. Let's check the price out. The high is 1265, and exactly this is right on the spot. 1265 resistance from the daily chart. This was a target from all the way back in February 27. So mild correction to the downside. Keep it in mind, as long as we maintain the price is above 23.53 level, we still remain bullish on gold and potential targets into the high, the daily high actually, which is at 1265. If we break below 1250, 1245 are going to be the targets. All right, let's move on to oil. And before I move on, let me remind you that we have gas numbers coming up. Now, they don't really influence gold, but they might influence the overall trading. So in oil, we're trading a new contract. Keep in mind that volatility is high. When we're trading a new contract, you could see it right here. We were basing, we have a slight gap up into resistance right here. The price got rejected. And we are moving south. Keep in mind, we are into resistance 48.22. The price might still flurry all the way into that area. It is a very choppy range over here. 5 p.m. came with a down move, and right now we're trying to stabilize below $49. Keep in mind that the daily chart. I'm gonna break the daily chart real quick. The daily chart right here suggests that we have a lot of topping tails. What this means is that every single time that the price has reached this $49 area, a little above $49 area, it got sold. So there's a lot of selling interest at this point. So we're going to see if today's price action is going to push it over this limit of $49 or if it's going to break below. So $49 is going to be here. A key here. Over 49, we can continue higher back into these highs, 49.40, or anything that keeps the price captive here at $49 can push the price back lower. Last but not least, let's take a look at the bonds, and the bonds had a happy rally yesterday. With prices moving higher. We did talk about these prices. Actually, I did have an overall target of 153. Continuation into 153.20 and 154. Now we're stabilizing at 154. Obviously, there's room to continue to 155, 155.15. So far we have a pretty shallow pullback all the way into the 20-period moving average. We had a spike higher in the overnight session. So a key note here that I have noticed for the last months is that we're having very, very active overnight sessions. So we're having very active Asian sessions and very active London sessions, which is very good for those of you that are trading other time zones other than the New York Open. So with this in mind, anything over 154.12 is going to assure a price continuation all the way into the 155 and 155.15 max level for today. If the price continues lower, keep in mind this is a support level. 153.28 is a strong support level, so this is going to be the bracket moving forward. 153.27 by 154.12 and a spike to 155. Thanks so much for joining today. Don't forget about our class. If you're interested in analyzing the market, knowing what's going on in the market, and identifying entries, stops, calculating target areas the way you hear me do in these videos, you can learn all this and much more in our Power Income Day Trading class that is coming on May 22nd. It is a 6-day Power Income trading class. And also we have a trading lab scheduled for May 30th. More information on our website, tradeoutloud.com/futures, or if you want to sign up, email me at info@tradeoutloud.com. We can schedule a 10-minute phone conversation. We can talk about your trading goals, and also if you would like to register also. All right, guys, this is all for today. Thanks so much for joining. See you tomorrow morning.